Welcome to Phillip Mastermind. My name is Kim. After a strong market rally in September and October 2024, China's stock market has experienced a sharp downturn, disappointing investors who had hoped the positive momentum would continue. The rally itself had been largely driven by a combination of domestic policy measures and fiscal stimulus plans, which encouraged buying. However, the strong performance in September and October began to show signs of overheating, with high valuations and speculative trading pushing stocks to an unsustainable level. In addition to that, the recent victory of Donald Trump in the 2024 US presidential race has brought renewed concerns regarding trade relations between the US and China. The threat of higher tariffs and the possibility of escalating trade tensions have contributed to increased market uncertainty. After a period of market challenges, China market rebounded following the 9 December 2024 Politburo meeting, which set the tone for the country's economic direction in 2025. This meeting, a precursor to the Central Economic Work Conference, set the stage for the country's policy priorities in the coming year. Policymakers outlined several key shifts in strategy aiming to stimulate growth and boost domestic demand. The primary focus was on a moderately loose monetary policy, which China previously adopted after the global financial crisis in 2009 and 2010. From 2011 to 2024, the country's monetary policy had been prudent, but the new approach signals a more accommodative stance. The government also pledged a more proactive fiscal policy, continuing the shift from prudent fiscal strategies of recent years. Additionally, policymakers emphasize the needs for extraordinary counter-cyclical policy adjustment, hinting at the potential use of unconventional tools to support economic growth. One of the main goals outlined was the expansion of domestic demand. The meeting stressed the importance of boosting consumption and improving investment returns. Policymakers also focused on stabilizing property and stock markets, with an emphasis on the wealth effect and its potential impact on household consumption. Policy coordination across government departments was also highlighted as a crucial factor for effective implementation. Looking ahead to 2025, the government is expected to maintain the GDP growth target at around 5%, consistent with the current year's goal. Policymakers are also expected to reduce the reserve requirement ratio, cut key interest rates, and raise fiscal deficits to stimulate growth. Further measures to boost domestic consumption, including consumer goods trade-in programs and household subsidies, are also anticipated. In the property market, initiatives to stabilize the market and reduce inventory surpluses are also likely. The tone of the Politburo meeting was more optimistic than expected, and further policy details are expected to be revealed during the upcoming Central Economic Work Conference. These measures aim to enhance market sentiment, but uncertainties around the incoming US administration may present challenges. For a more sustained rally in the Hong Kong and Chinese stock market, more decisive measures and effective execution will be necessary. Valuation-wise, as of 10 December 2024, the Hang Seng Index is trading at 9.3 times PE, one standard deviation below its 10-year historical average, while the CSI 300 Index is trading at 13 times PE, a tad above its 10-year historical average, potentially indicating the stocks within Hang Seng are undervalued. In summary, the first quarter of 2025 will be a pivotal period for China, as it will reveal the effects of potential US tariff regardless of their intensity, and coincide with the anticipated fiscal stimulus measures within the country. While growth challenges are expected to persist throughout 2025, the true impact of these policy adjustments will be crucial to monitor, particularly at the stock level. The effectiveness of China's fiscal and monetary measures alongside global trade dynamics will shape market performance. Investors will then need to assess how these policies influence sectors differently and whether they can mitigate ongoing economic headwinds. As we approach the tail end of 2024 and move into 2025, we anticipate continued market volatility. In this environment, we are maintaining a cautious approach to sector and team selection, particularly in areas where valuations appear stretched relative to fundamentals. A noteworthy avenue for investors seeking diversification in their portfolio is through Phillip Capital Malaysia. Phillip Capital Malaysia offers multiple private managed account services managed by professional fund managers. By leveraging Phillip Capital Malaysia's private managed services, investors can enhance their resiliency, optimize portfolio return, and navigate the complexities of the market with confidence. Apart from our private managed account services, we also offer unit trust funds, PGWA, that could cater to different investors' needs. That's all for today. Stay tuned for our next Phillip Mastermind. This update is brought to you by Phillip Capital, your partner in finance.